What's up guys, and welcome to a new video. In this video I will talk about the trades I took this week and last Friday and why I took them. Both trades were on EURGBP and I will talk about how I entered them and why I was looking for them shorts. So let's get into the chart. As you can see, we were swing bullish very clearly, so we could trade in towards the swing high again because we already made that pullback inside the discount prices. But I still took two shorts. Well, why is that? First of all, the fundamentals were minus 62. So this means that price, is ready to maybe trade down lower, right? Then, if you look a little bit closer at the chart, you can see that we have fake demand over here. Why is this fake demand and what is fake demand? First of all, why is it fake demand? Because there is no liquidity in the move to the upside. So what do you expect? To get this whole move taken out like this and take out this liquidity. And what is fake demand? It is a demand zone that really doesn't count as a demand zone because you expect that demand zone to fail and break under it. So that's also what I'm expecting at this point in time. And we also have this yearly level open where price could easily trade in towards because this acts like a magnet and a support and resistance like price point. So because it attracts like a magnet and the fundamentals are bearish, plus we have this fake demand zone, I easily expect a move in towards these price levels, right? So after we grabbed liquidity above these highs, I went over to the 1 hour and I was looking for confirmation. Over here, you can see that we had a 1 hour fractal break, so we created new supply, and from this supply zone, we could trade down lower in towards at least this liquidity point. So basically, this is the end goal to trade towards, right? That liquidity point and at yearly level. But if you grab liquidity at the highs, you at least expect to get the first liquidity point at the lows taken out, which is this low over here. So then going over to the 1 hour, I was looking for that confirmation after that fractal break, and then I went over to the 50-minute to look for a entry inside that 1 hour supply, which is this whole buy before the sell, right? So at this point in time, I wake up and I can see that we had this kind of a range, right? We then swiped the high of the range, meaning that this could be a nice high after we break this low. So what happens is we break that internal structure. So what does this mean? This high becomes valid, so a strong high, because it takes out liquidity and it causes a break of structure to the downside. So now new supply is formed over here and price could trade down lower from this supply and in towards that liquidity point, which I explained on the 4 hour. Then what I was looking at was this refined supply zone where I put my entry on and then my stop loss above the safe high, which was created over here. So then you can see that we got entered in the trade and price dumped down lower. But then at this point in time, I stepped out of the market for a 2RR. So why did I step out of the market if my plan was to hold for a 3RR? First of all, my plan was not to hold for a 3RR. Of course, I always hold for a 3R, but there are some exceptions, such as this one. At this point in time, you can see that we have this big white candle, right? And I stepped out of this one over here. Now, what is this big candle? This is news. I think this was FOMC, but don't kill me if I'm wrong. But before I entered the trade, I said to myself, if there is news, I will step out of the trade. So um, news came and I stepped out. No matter what, I just followed my rules. But as you can see, if I just held on the trade, then I would have hit my TP. But I'm still very happy that I closed early because it shows discipline, and on the long term it's very, yeah, it's just good for my trading and my mind, because this wick or candle isn't that big when looking at the previous candles from this same news. So this candle could also be like 5 times as huge as this one and just trade like in towards my stop loss, and then I wouldn't have any profits, right? So still very happy that I stuck to my plan and went out for a 2RR. So then you can see that we grabbed that 4-hour liquidity which I was explaining earlier, right? Grab that liquidity, and then I saw this supply zone getting formed with this liquidity laying under. So from this point of interest, I was looking to short further in towards that ultimate liquidity point. So then I went over to the 1 hour and I waited for that supply zone to get tapped. Boom. Let me go back a little. So after my alert got off, I went over to the 50-minute to look for an entry. So you can see that we take out this liquidity high, and from there I was looking for a fractal break to the downside in order to go short. As you can see, we also swipe early sellers. What do I mean by this? So we take out the liquidity and sellers step in towards the market. So we trade down lower. Then we swipe those sellers and take out their stop losses so they lose money. And then I know that price is ready to make the real move in towards the downside after we see that break of structure over here, this 50-minute fractal break, and then I know that price is ready to trade down lower. So after we have that 4-hour fractal 50-minute fractal break, I placed my stop loss above that safe high, which took out liquidity and causes a break of structure, meaning that this is a safe high, and I put my entry on top of this 50-minute refined supply zone in order to trade a 1 to 3 in towards these liquidity lows. Keep in mind the fundamentals were bearish, and this was the week. We traded down, up, and for the week we were still above the weekly open, but the fundamentals were weekly bearish, meaning we could easily get a move under that weekly open, right? So I placed my entry and I waited for a tag. Here it got pretty close to my stop loss, but it doesn't matter because I already placed my stop loss above a safe high, and if this safe high goes, then I'm okay with the loss and I just wait for stop loss or TP to get hit. So price trades down lower, right? And it got very close to our TP, but then price reverses on us, and over here I stepped out of the market once again. Over here for a 1.75 RR, I stepped out of the trade. Now why did I step out of the trade? Once again, because there was heavy news. You can see that this week, this was CPY, I think, and it is very heavy news that could easily, once again, just as this trade, take out my stop loss, and then I will lose a lot more than I originally wanted to. So I stepped out of trade for again a little bit under 2RR, but just to be sure and save of my profits instead of gambling with news. And as you can see, price pushes up with that news week, so our stop loss would have gotten hit. But yeah, these were the trades, guys. I hope you learned a lot from this kind of trade breakdown. And if there is anything I need to change up or I can do better, then please leave a comment down below. And yeah, see you guys in the next one. Ciao.